Shifting focus to deal making and corporate action, the JSE may see increased deal making and corporate action in 2025. This is due to a rollicking start to the year, as 2024 was the resurgence of South Africa Inc. Now this begs the question on what will be the hottest deal-making moves in 2025. Marc Hasenfuss from Financial Mail joins us to provide more insight on the corporate action and what lies ahead. Thank you so much for your time, Marc. Now, what is making the environment ripe for M&A activity this year?
Well, I suppose in South Africa alone, we've seen a resurgence toward the SA Inc. stocks. There's a lot more focus on them. I'm not saying that's just going to drive deal making, but I think there's been a lot of pent up deal making that hasn't happened over the years for various reasons. I guess people not wanting to go through with deals, maybe there wasn't enough confidence, but it looks like it's quite pregnant at the moment. It is actually funny. We just finished the story, and as we put the thing to bed, we saw a handful of deals go through. So it's just perfect timing. I mean, I saw Copper 360 doing a little deal in wind energy. Trustco's delisting. Hudayco made not a huge acquisition, but a significant acquisition. They never make big acquisitions. They just bolt on. And I see Foresight going to the main board, which probably, I don't know, might signal some corporate action on them as well. So it's interesting. Okay. Things are happening.
I mean, you talk about Copper 360 right now, and really the sector that seems to be making the most noise is mining. I mean, the paint isn't even dry on the potential deal from Anglo American and BHP, and now we could be looking at negotiations between Glencore and Rio Tinto. What could we see there, and could the two potential tie-ups influence each other?
Yeah, look, I'm not sure it's kind of simple as that. You could, and that's against speculation about Rio and Glencore. There's been a lot of speculation in the mining world about other companies and other permutations. But yes, I think everyone's watching Anglo. They're in the throes of a restructuring. As you know, it's not an easy restructuring. They've got a little thing called De Beers. What they do with that would be probably one of the most intriguing deals of this year. If they do it this year, diamonds are not in a great space. But once Anglo's restructured, who knows? Who knows whether someone else might look at them? Maybe Rio Tinto and Glencore don't have a type. I mean, as I said, it's speculation. Someone else might look at Anglo's. They're going to be a different beast by the end of the year.
Yeah. I mean, just looking at maybe some of the potential reasons why these tie-ups maybe haven't happened until now. You look at the Competition Commission and really just some of the deals that they have delayed and some that the Competition Tribunal has outright declined. Could the competition authorities be a big thorn for this M&A activity, particularly when it comes to SA Inc. M&A activity?
Well, there's been a bit of a change of guard, and there was quite a positive response to the massive Vodacom blocking, which I thought was a good thing. We haven't heard anything since, but the past track record has been quite. I think it has been a bit of an impediment to doing deals. I honestly think companies that have to wait, 9 months to conclude something, and in the Maziv Vodacom deal, it's been a lot longer. It's been years, and that's costly. That's very costly. In the case of Maziv, they needed that deal to clean up their balance sheet and to drive their expansion. If the competition authorities are looking for social impact, getting fiber, cheap fiber to homes all over South Africa, can't think of a better thing. But yes, it's frustrating. And I do think having, conditions prescribed can be a bit of a detriment. And I don't think people like that. So I don't know if that's stopped deal making, but I think some of the stuff is so attractive that it's almost hard to believe that people aren't going to be able to go for a deal. I mean, I think there's some really cheap assets and there's some good breakup value. I'm not so sure about new listings, but I'm sure we're going to see a few things this year.
Well, talking about attractiveness, I mean, from the side of the buyer, it's a no-brainer that a lot of these assets are looking very, very cheap. But I want to zoom in on the side of the seller. Could there be a danger of companies selling their crown jewels here? I mean, you look at some of the concerns that we've had over Life Healthcare selling its Life Molecular Imaging business, and also Supergroup letting go of their stake in SG Fleet.
Yeah, now again, that we've got to look at with retrospect. We'll only know in a few years' time, unfortunately, whether it's a good or bad deal. Sometimes these things do come back to bite you, end up being listed or something, or part of another listed group and doing awfully well, and it's in the public eye, and then people ask questions of the AGM. I've seen it before. It's not nice.
Yeah.
But it really depends. I think sellers can also maybe be a bit demanding. some of their entities they want to hold on to and ask for too high a price. That's the other side of the story as well. It's not only letting go a gem, it's sometimes maybe expecting a bit too much and then a deal doesn't happen and the asset lies in the wrong hands, which isn't a great thing. Sometimes it was emancipated or with a new owner or new influential shell that could help. So sometimes that's also a bit of a problem.
I mean, sometimes also companies aren't trying to outright sell their assets, but they're trying to unbundle them or not unbundle them and separately list them on the JSE. We did have a lot of those last year. Does the environment look welcoming for those as well this year?
Well, look, let's be honest. The two assets that were unbundled last year were really nice assets. I think people wanted shares in Boxer. I think that was clear. I think everyone ran at that and wanted a piece of that. We buy cars, maybe not quite as much, but I think it's turned out to be so far so good. Maybe the premium on it or the multiple is a bit rich at the moment, but geez, it's done well. So if you held on to those shares out of transaction capital, you've done very well. Both are growth companies. Not everyone can unbundle something like that. We've seen the unbundling of Rainbow Chicken. It's not exactly a growth company, but full of value. And that's another one that more and more I've noticed people are picking that one and saying, Rainbow, look at Rainbow. It's got a terrible legacy, but great management team. And yeah, maybe market's not seeing the proper picture there. Could be a nice juicy bird to pluck.
All right. Well, we do have to wrap up the conversation there. Thank you so much for your time and for your insights there, Marc, on the landscape of M&A activity on the JSE. That was Marc Hasenfuss, editor at Financial Mail.